Inflation expectations are coming down, but inflation is accumulative. And we must remember that the longer that this expectation is prolonged, the more time that it takes for this expectation to get to the levels that analysts expect, the worst. Let's think about this for a second. Inflation expectations have fallen dramatically thanks to the rate hikes. It's been very evident. Rate hikes have created an immediate effect on commodities. Why? It is much more expensive to purchase transport, to purchase storage, to hire tankers, to finance margin calls, etc. Absolutely clear. Higher interest rates have also created a little bit of a credit contraction. Monetary contraction generates a lower level of inflation. But inflation remains persistent and massively higher than what it would be if we think that those prices of commodities have corrected to pre-Ukraine invasion levels. So, if we look at commodities, and if you thought that inflation was caused by commodity prices, today the inflation levels should be below 2%. However, they are close to 4%. Therefore, we need to be extremely worried about the fact that core inflation remains persistent and about the fact that the reduction in inflation has come only from the reduction of commodity prices in international markets thanks to the rate hikes. But we have not won the battle against inflation yet. We need to pay a lot of attention to the fact that liquidity injections remain, and also think that if inflation is accumulative and the process of reducing inflation is prolonged, then the loss of purchasing power of salaries and the worsening of the situation for families and businesses will be much worse. Because if we have had negative real wage growth, negative productivity, and at the same time an increase in debt in an environment in which everything seemed to be growing, the economy seemed to be growing adequately, then the reality is that the labor market and consumers' situation is not good. And it's shown in consumer confidence. Consumer confidence is plummeting. The real wage growth is negative. Productivity growth is negative in the United States. Therefore, combating inflation is absolutely critical because it is eroding the economy and is making it much worse for families and for businesses. The fact that the government is not paying attention to the need to reduce spending in an environment of normalization of policy means that the entire burden of making this inflationary pressure persistent is falling on families and businesses. This reduction is relatively easy, from 10 to 5%, very easy to bring down inflation. Rate hikes, easy, done. Commodities fall, everything looks better. Still, inflation is accumulative, means that it continues to drag on earnings, on growth, on jobs, on wages, on real wages, and on deposit savings. Bringing it from 4 to 2%, not that easy. Not that easy. Inflation may be negative on a year-to-year basis if we look at the PCE deflator. But we cannot think that everything is wrong, because we are looking too much at annualized rates of change, not at the accumulative situation in terms of the deflator and in terms of the overall CPI, particularly core CPI. Remember, inflation is accumulative, inflation is a tax on everybody, and if we don't have a strong policy of normalization of monetary policy, but also normalization of fiscal policy, i.e. reducing government spending, this may not happen, this reduction may not happen. Furthermore, we could have a bounce of inflation very, very quickly once the drag created by government spending becomes even more acute, and then central banks come back to monetizing debt.